Okay, last one, we got Kiwi dollar. So I'm trying to see what happened here. I drew this line, but because I thought it would reject and then come lower, and it actually did that. It just this candle didn't come up as high. So okay, that's good to know. Broke this area and is now struggling to break this area, but is definitely bearish below this moving average, just making lower lows and lower highs. Looking for a short position. I think could adjust this. I think you're looking at something like this. Keep it above this zone, probably above this previous wick as well, just to be safe. Something like this, you can see Friday's candle came in, rejected pretty good. Basically, it's just having a tough time breaking this out here. So that's the only reason that it's popping back up again. But yeah, I'll just look for an entry around 61.2. I mean, that's actually the 2s and the 8s. So like 612, 618, those prices are very institutional too as well. So price likes to gravitate towards those. So I'm really comfortable with that as well. So let price come back up to this zone and this price at 612. I think you got a pretty good short entry there on that, and then you're just going to hold it, and hopefully it breaks this zone. Hopefully it's enough momentum to break this area, and then you're probably pretty good to go right down to 59 level. That's the full monthly range. I think that's what, 325 pips. Yeah, so make sure your stop is above any previous candles. So just in case price comes into this zone and then just decides to push up even higher, then you want to make sure your stops, if you're using a stop, is set outside those areas so that you're good to go. And then of course, just make sure that your price action still aligns. So this is already pretty good. You can see on the 4 hour, I mean, it's pretty much textbook. It doesn't really get better than this. So comes down, comes up, comes back down, comes up, lower highs, lower lows. So now this is kind of making its lower high now. So you just want to see what price does. Like you can see price came into the zone here with this 4 hour candle, then you had a bearish engulfing candle, so that's a good sign. Yeah, your best bet would be to just let this moving average even catch up a little bit. Maybe it'll catch up kind of at the same time as price pushes back into this zone. What would be really ideal is if price came back into this zone right at 612, and then you got it started making lower highs right here versus like compared to this relative to this chunk here, and then you're pretty good to just enter your short position, because like it's completing its lower high, and now it's gonna lower low all the way through back down. So I do think that's a pretty safe bet, but I would let price come up a little bit higher still, just so I can get a better deal. Let it come up to 612, take that short position, target 59 level. I mean, you'd be looking at 220 pips. So I mean, that's not bad, but this pair also doesn't move that much. So I mean, it only moves about 325 a month. So if you can get 200 of those, that's pretty reasonable, or 220. I think that's great. I think you do have some confirmation already. You just see that Friday's candle came into this zone and completely rejected. So today's candle might do the same. So let price come back up, start rejecting, start pulling back, and then enter your short position all the way down to 59. So that is Kiwi dollar. That's all I got. Thanks for tuning in. Appreciate you guys supporting the channel, and it's been growing crazy. So yeah, please like and subscribe if you enjoy the content. I'll keep putting out more every day. I like teaching people how to trade. It makes me a better trader too, because I have to look at everything constantly and be really conscious of what I'm teaching and what I'm looking at and what I'm considering. So thank you guys. I'll see you in the next one.